Hey everyone, Jeff Dorman here, CIO of Arca, back for another edition of That Are Two Satoshis Live, where we talk about everything happening in the crypto markets. And thrilled to be joined by Alex Kruger, who runs Asgard Advisory and Kruger Macro on Twitter. You probably know him. He's been around for a long time. I've known him now probably over 5 years now. Always a respected voice in this space. And I think with what's going on in the crypto markets, definitely want to hear your thoughts on what we're seeing here, and I'm sure the audience does as well. But before I kick it over to you, Alex, just a quick reminder to everyone, nothing we say here is an investment advice, normal disclaimer. You can also go on our website. ar.ca/blog to read the weekly That's Our Two Satoshis write-up that we post every Monday. But other than that, we're just going to talk about the crypto markets like we do every week. And Alex, I guess I will turn it over to you. What's happening in the markets right now, man?
Well, it's been quite a momentous week, right? With Mt. Gox distributions being announced officially and triggering an 8%, I think it was 8.5% correction on Bitcoin, basically from beginning to the bottom, right? It's 58 something.
Yep.
In a few hours, and it was rather, I mean, it's the biggest move in Bitcoin in a year, or maybe in a little bit over a year. So it was quite significant. And when these things happen, they throw people off quite significantly. I bet you get a lot of LP calls asking you what's going on. Is the bull market over? I get a lot of messages of people saying, like, is the bull market over? Is this it? And I definitely don't think this is it. You could even argue that much of the move was front run, and I could argue that the move there was could be argued that it was claim holders basically closing their trade now that they have certainty on distributions. The move may not be over, but I'm definitely not concerned about it. It's the key there is. What percentage of those Bitcoin that are about to be distributed, actually they already started a few days ago, are about to be distributed to the market, is going to be sold. That's the key, and we are guessing. What do you think?
Well, I think that's obviously the most interesting question, right? You're talking about $8 to $9 billion worth of Bitcoin, obviously a much smaller fraction in dollar terms in Bitcoin Cash. I think it's pretty safe to assume all of the Bitcoin Cash is going to get sold, because Bitcoin Cash wasn't even around when the people who were trading on Mt. Gox were holding and investing in their Bitcoin. So this is a piece of a dividend of some sort that they got with no real attachment to it. I think it's pretty safe to say that Bitcoin Cash is going to get sold. The Bitcoin itself, 100%. The Bitcoin itself is more interesting, right? Not only because so much of, basically put it this way, if you needed cash, if you needed liquidity, you had ample opportunity over the last 10 years to sell your claims, either to a distressed buyer or to someone else who is a more long-term holder. It's unlikely that people would have held on this long just to sell it for cash. And I think is more likely is either these are long-term Bitcoin holders because if they believed in it 10 years ago, they probably still believe in it, or they're more likely to deposit it onto exchanges and probably buy something else with it, right? Either recycle it into some of the altcoins that exist now that didn't exist 10 years ago, or maybe even into equities. But I think it's very unlikely that this is going to get sold into cash. And as a result, the front running and the move probably, as is usual the case, probably is overestimating the impact that that these tokens will have on the market.
Yeah, there's a counter argument, which is basically, it's not my argument, and I don't think is the case. But the counter argument is that Gox claim holders, the ones that didn't sell it, yeah, of course, they could have sold it all throughout the process, right? But at the same time, Gox kind of kept all claim holders like on a leash. Like you would always expect that, hey, it's happening. It's happening in 10 months. It's happening in 12 months. It's happening in 6 months. It was always for many, many years. We all had this expectation that it's around the corner, like 1 to 2 years tops. And it just kept on going and going and going. So the counter argument is that most holders actually that wanted to sell it didn't sell it because of this kind of like carrot. It's a valid argument. I'm not buying it. I don't think it's that significant. I guess neither do you.
Yeah, I mean, it is a good argument. I hadn't heard that before, and I think there is some truth to that, right? I mean, this was not a clean bankruptcy process. Like most bankruptcy processes, there's obviously a lot of back and forth with regard to the creditors and the debtors in terms of when you actually are going to file a plan and vote on it and move forward. But this is certainly messier than the ones that you are typically seeing in, the U.S. or even in Europe. So there might be some validity to that. But let's change gears a little bit from Mt. Gox, but more generally. I wrote about this week in our blog talking about the Bitcoin and the Ethereum vortex, and basically saying that, back 6 months ago, I mentioned that these ETFs were going to be a double-edged sword, right? On the one hand, the ETFs are going to attract a lot more capital from non-crypto native investors, and it's going to bring crypto into the everyday mainstream conversations. But on the other hand, we're jamming a really cool technology that has T+0 real-time settlement into an antiquated T+1 box. As a result, you're not really moving crypto rails forward. And if you look 6 months later to where we are today, you're obviously having positive events around crypto in the sense that you have these ETFs being approved, you have regulatory, moving towards regulatory clarity in the US, but all of the conversation these days is around Bitcoin and ETH. And as a result, you're kind of sucking both financial and human and intellectual capital away from other parts of the market. How do you think about that in terms of the positive of these new ETFs and the new regulatory regime versus the, lack of focus and energy in every other part of the digital asset market?
Yeah, it's this is actually very important, and it's what I think has thrown most people off, and is responsible for this despondent sentiment out there, which is kind of crazy given that Bitcoin is at 62K right now. But it's the fact that a lot of people actually they are very poorly positioned. It happens both on the investor, on the individual investor side. People basically, the way I see it is, people started getting positioned in late November. That's when it started, and they missed the Bitcoin move, so they went into alts and they got trounced. That's one part of the story. The other one is also, this also applies to some funds out there that basically their mandate is no Bitcoin, crypto, no Bitcoin. So there's some people out there that are suffering. So it's a tale of two stories. Personally, I find it very hard to be bullish on alts. I'm mostly BTC and ETH these days. Like a small percentage of my book is on altcoins, and it's very, very selective. I have a very hard time being bullish. Besides very short time frames, say like week to 4 weeks. That being said, the charts on alts right now look pretty good, and the move there on Bitcoin yesterday was very interesting. It was very unique because usually these things go hand in hand, right? And that didn't happen. Bitcoin went down again 8%. ETH was down. At the end of the day, 2.5%. Sol was up. Meme coins, the larger ones, were up. And for price action traders, even if the trigger for that kind of is driven by specific drivers, the price action traders that are not actually looking at the news, as a lot of these, they just look at the charts and they say, "Hey, strength on alts. Bitcoin is crashing. Alts are green. Bottom signal," and they beat it. So it's a self-fulfilling prophecy.
I think some of that is also just time frame, right? If you think about basically the peak of the market this year, at least, was around March 13th. So you're almost, call it 90 days, right around 90 days or so, 3 months from the peak of the market. And if you look over a 90-day move, Bitcoin's now down about 10% from the peak. Ethereum's actually only down like 3 or 4% from the peak. You have a couple of outliers like Telegram and Ondo and Pendle that are actually higher over that time period. But just about everything else is down somewhere between 25 and 50%. Like Solana's down 25%. You got things, like Matic is down 43%. Just pulling a few out there. Arbitrum, Optimism down 50%. So one way to think about it is that this alts have never really been a 5 to 10x beta vehicle. It's always been closer to 2 to 3x. So if you look over, even though on the short term you're talking about a day or two where Bitcoin went down and some other assets actually went up, and certainly not down as much, over a 3-month period, there really is a big chasm from how much Bitcoin and Ethereum have outperformed the rest of the market, and maybe just a little bit of a catch-up trade. So I guess my question to you is, saying that you're mostly in Bitcoin and ETH right now, but knowing historically you have certainly invested very well in other areas of the market as well, what would you be looking for, either in a crypto idiosyncratic form or maybe a larger macro? What would you be looking for that would make you potentially roll out of some of that Bitcoin and ETH into other areas of the market?
I'm waiting for the ETF launch on ETH, and I want to see flows come in. And I think once, assuming it happens, which I'm expecting, once ETH goes back to all-time high, not all-time highs, year highs, I think alts should catch a bit. At the same time, I think it remains very important to realize that this is a much more sophisticated market than it used to be. So it makes sense to have this very large discrepancy between in performance across altcoins. So on one hand, that's kind of like the trigger I'm looking at. On the other hand, it's very important to actually be a better asset allocator and pick the altcoins very well, because otherwise it's very easy to do very poorly. And that's something there to add is I mean, these altcoins have such an extreme issuance coming in. We can look into, like you mentioned, the good performers, Ton, Ondo, Pendle. I'm not much into Pendle. Ondo, basically, it's a great asset. It's a BlackRock meme at the same time, more than what the market is, I think, is looking at it. Anyway, the point about Ondo is it's also one of these coins of the low float, high FTB that we like talking about recently. They have massive unlocks coming in starting in January. And then we have Toncoin. Ton is an underground great story being pushed very aggressively by VCs with some very good metrics on the gaming side. So it makes sense, the performance. But back to the beginning of the question and back to you is, yeah, it's the ETH ETF, and I want to see flows.
Yeah.
Yeah.
That makes sense. And I guess, one of the things I've always joked about, those who know me and have worked with me for years or even decades, I come from a traditional finance background, moved into fintech, then got into crypto about 8 years ago. It was always funny watching the evolution of crypto investors. Some of them maybe didn't even know that jobless claims came out every Thursday. And then all of a sudden in 2022, they were glued to it every Thursday morning. Others never even, thought about the FOMC meetings until recently. You've been one of the people that I've always followed that have had a pretty good balance between your macro thoughts, your on-chain thoughts, more maybe some exchange and TA stuff with liquidity and lines, as well as, sort of just broader crypto themes. How do you spend your time? How do you toggle back and forth? And I guess a part B question would be, how important do you think the next 6 months are from a macro standpoint, given likely of a rate cut at some point, as well as the U.S. presidential election?
On how I spend my time is I'm all over the place. I'm usually working nonstop, spending my time between trading more of a larger time frame these days than I used to, investing and advisory, mostly on the crypto side, helping teams fulfill their potential. Let's put it that way. And what was the other question? The other point you were
with specifically to the macro. What are your thoughts?
The macro, I think, the macro is actually extremely good. It's good, and is we're transiting a period that is in the FX world we call it Goldilocks, which is basically growth is good, but it's not too strong. So it's not like heating up, and there's no reason for the Fed to be concerned about having to hike rates. Inflation is coming down and growth is good. I can't go very deep into it, but the point is that it's an environment where risk assets perform very, very well. And my macro view towards year end is that, leaving aside the elections that are very momentous and going to drive very significant, should drive very significant volatility, which I think would give very good entry points in risk assets. Midterm, like into 2025, the market should keep on rallying. Market in this case is the S&P, the Nasdaq, risk assets, equities, and the ETFs they finally linked the Bitcoin and ETH to the macro side on a permanent basis now. This correlation comes back and forth, but it's definitely there. And given that I'm very bullish on the macro side, I remain my outlook for Bitcoin and say Bitcoin remains very bullish into year end. If that happens, if a view takes place, it just makes sense that it just carries everything with it.
Yeah.
Like when Bitcoin is going up, usually everything goes up. You know, it is that simple. Before I wanted to, let me see if I can find it here.
Well, while you're looking for it, I'll just add to that the historically, U.S. presidential elections really don't have a huge effect necessarily on market direction. What does, though, that we learned 4 years ago is that investors hate uncertainty a lot more than they care about the outcome. We saw that around the Trump presidency 8 years ago, as well as 4 years ago with Biden, where anytime you think there's going to be some uncertainty and you really don't know, and there's potentially turmoil in a country, markets tend to sell off ahead of that. And then no matter what, whenever there's a clear winner, regardless of who that winner is, markets do really well. We saw that in November 4 years ago, as well as November 8 years ago. I think we'll see something similar. We might see some of that volatility you're talking about ahead of the election, like pretty much straight up and smooth sailing, thereafter, regardless of who wins, as long as there is a clear winner and not any sort of revolution based on who the winner is.
So I'm looking at a chart here. This is what I was looking for. Basically, volatility in election years into November, where this is average monthly volatility of the S&P 500, and the sample size is 19 starts in 1928 until present, and the volatility in July, the average is 14.7. This is election years again. August 15.4, September 16.5, October 17.9, November 18.3, December back down to 15.
Yeah.
So data supports this view of volatility into elections that is going to make things very, very interesting, I think. Like, we are going through a boring period right now with basically very low vol on equities, NVIDIA driving most of it. People are talking about NVIDIA just stopping, but it just turned around.
Well, great.
Jesus Christ, 7%. I'm on vacation right now, so I had missed that 7%. Wow. This is great.
Well, with that in mind, we'll let you get back to your vacation. I do appreciate you taking the time late at night here. Hopefully you have a nice glass of wine or something to drink with you while you talk. But Alex, end us with where can people find you? Where can people learn more so that we can make sure that you're getting your thoughts out there, and we'll certainly have you back on the show again sometime soon.
Yeah, of course. Always on Twitter. Happy to chat with anyone and answer DMs and replies, and just, happy to talk to everyone. So yeah, Kruger Macro on Twitter. And thank you, Jeff. Thank you so much.
Perfect. Well, thanks, Alex. Enjoy the vacation. To everyone else, appreciate you guys listening. As always, we'll be back again with another guest next week. And as always, you can find our blogs and other educational materials on our website, ar.ca. So that's our 2 Satoshis for this week. And Alex, thanks again for joining, my man.
Thank you. Take care. Ciao, ciao.
Take care.